G'day ladies and gentlemen, it's James Marley here, co-founder at Livewire Markets. Fortunes can be made and lost in the mining sector, and today we're going to help you avoid getting crushed from three of the biggest mining tragics I've ever come across. I'm joined here in the Sydney studio by the crew from Money and Mine. Gentlemen, welcome to Sydney. It's great to have you here.
Mate, it's great to be here. Thank you very much for hosting us in this beautiful room.
Bit of weather,
in a
nice
beautiful
hats.
city. Mate, how good is the Livewire hat? Yes.
Is this the first mullet you've ever had on Livewire?
It's definitely the first, might be the last. As I mentioned in the intro, you guys are mining specialists, passionate, out from WA. I love it. But for our audience, people that are watching on Livewire that don't know who you guys are, tell us what you're trying to do.
Well, we started Money and Mine about a year ago, and with the purpose of it was to be a daily news show, daily mining news, all stock market related, both Australia, all around the world, and I was differentiating ourselves. We're fully independent. We don't take money from mining companies, so we're never conflicted, and we just want to talk about the stuff that never gets talked about, that might be red flags for companies. In the goal, we don't give investment advice, but we want to inform the audience as much as possible so they don't punt on a mining stock just because it's got a big following and then it goes down and they lose money. So, and I think we're probably helped a few people along the way, we're hoping, including ourselves, James. I was an investment tragic before this, but I've lost heaps less money since I've started Money and Mine.
That's what I said in the intro. We're going to get into the red flags. I'm going to pick your brains around what you've learned over the last 12 months. Before we dive in, how do you all get together? Quick background, where you fit in, what you're good at, who plays what role in the business. Strengths, weaknesses, most annoying.
We've all got a role, and I think a role in the business is one thing, a role on the show is another thing as well, right? And we have roles, but they're actually our kind of who we are in real life in a lot of ways. Like Matty is just an anchor personality. He is like the character. He is the epitome of Aussie mining. Like that's him. He lives it, right? That's literally who he is. Like JD is naturally just a very analytical person who in all of his free time will research and read as many books as he possibly can. He loves just learning. He's like a learning machine, the Warren Buffett, Charlie Munger kind of quote or whatever. And I'm a cynical piece. I assume everything is a scam, and and I have to prove myself that it's not. But I will be so cynical of everything. And they're kind of the characters on our show, but they're kind of who we are as well.
I think it's one of those things. If we wouldn't have the show if you took one of us away, because a lot of the guests we get from all around the world, like JD recruits them out of bloody nowhere. I don't know where he finds them, and Trav's in the weeds analysis of deals and the M&A and the poor corporate governance and finding the historical links of why something might be a bit dodgy. You just take, and then I've obviously got from a mining background and on-site background, so I've got the practical experience. So you take one of us away, the whole thing, it would continue, but it just wouldn't be what it is.
And I think to tie it together, it's the show we want to listen to. It's what we wanted a year ago that we would have thought, when we came into the industry in the various sort of ways that we did. It's this is what we kind of would have wanted to listen to. Interviews with fundies, with experts, whether that be geologists, metallurgists, or just people in general chatting about ASX announcements, what to look out for.
Unconflicted analysis.
Exactly, that's it.
When I was thinking about what we're going to talk about with the three of you today, I was thinking, what can we get for our audience? And as I said, I just want to help them avoid getting crushed. So that's my objective from our chat today. So as we go through, wouldn't mind working out how we can build out a bit of a checklist. But the first thing I want to ask you spent a bit over 12 months dedicating yourselves to this new passion project about learning about everything from mining. What are a couple of things that you know now that you wouldn't have known 12 months ago that you're glad you do know about analysing mining stocks, about reading announcements, about avoiding those traps? Matty, I'll let you kick off.
Yeah, so I come in pretty oblivious to the whole thing, more so just how the whole industry worked in terms of incentives, both from within the companies, the sell side, all the brokers and everything, and just even the media as well, just how that all works. And what I've learnt, even just news articles in your reputable publications, it's why is that news article there? Who's got an incentive to have that? And Trav, that's Trav's area, but he's like that's what I've learned so much from him is like what are the incentives, and then looking at stocks. So if you see, you see something that's just getting promoted, like it's in the news all the time. They've got heaps of podcasts coming out. Those podcasts are probably paid for, and it's just this big, massive promotion wheel just to get the liquidity in the stock and drive the stock up. But I'm like, why aren't you actually on site working? That's a red flag for me now. It's like the best mining companies that see by performance, you never see them in the media. Yep. So I look at ones like, Capricorn's a great example, and they never promote their company, but it's one of the market darlings, and it's because they just focused on mining and making money. So,
JD, what's something you learnt over the course of the past 12 months that you didn't know if you weren't doing Money or Mine?
I think to what Maddie said about Trav, being skeptical is the way to go, and the way in which that's sort of seen in my investment style is you have to be won over. I don't come from a position of like, oh, I will invest in this. It's a position of I won't invest in this unless I'm won over, and then it has to meet all the boxes. Things we talk about all the time: incentives, management that has a track record, jurisdictions that pass the pub test, all these sorts of things play into it. One of the things that really stands out, not that it didn't before, is that these businesses are all capital hungry, and they're all sooner or later come raise. Every company, obviously, pre-revenue is come raise, and that plays into the incentives that we see all the time. How they, the language they use in their announcements, whether they're going to conferences, how they're spending shareholder money, it all plays a role. And it's, all these things are things we knew about, I think, a year ago, and they're just magnified phenomenally after doing what we've done for a year.
Echo that point, right? Because like the unfortunate reality of an industry that is so capital hungry like mining is oftentimes the stewards of these companies don't actually have much skin in the game. So the individuals running them, what their real motivations or incentives are to do, are very short-term oriented, and they're to do with enriching themselves, not necessarily shareholders. Like it was before doing this, I remember in banking, and in banking you're pitching to the client. The client is a company, you're marketing yourself and blah, blah, blah. And the default position you take is, the management team, they're geniuses, they've done all the right things, and I'm going to regurgitate their message. And I remember when we started this, it was like, I had to flick a switch in my brain, and it was like, no, my default position is not to accept the story that management tells me. It's actually to assume the opposite. And I think that collectively makes people better, like analysts, better investors, if you assume like management has an incentive to lie to you.
Yeah, if you tie it all together, like the whole thing is, and from like an investment point of view, is like if all this is going on and they're doing a lot of promotion and everything, and they need capital eventually, that when they capital raise, the stock price goes down. So like, your retail investors, that they mightn't be a 708 investor that can participate in the raise. And usually if you're participating in raise, that's because they need money. And that's what the stock price goes down. So it's like knowing that how that narrative's playing out to avoid is like, right, maybe that's not where to put my money now, because that is probably going to go down based on the narrative playing out.
I think about the old Buffett and Munger rule of not losing money, and I think it's amplified because we're terrified of people listening to what we're saying and going and buying a stock and losing money. So we're constantly thinking about how we talk and the analysis we do with that in the back of our minds. I think that's...
I'd definitely say there's an element of like that overweight towards the skepticism comes through in the show. That's
actually an interesting observation, right? I had some feedback the other day. Why don't you guys talk more about the stocks that are good? And part of that's just naturally who we are, but it's also like for us, we want to play a long term. We want to be around for the long term, right? And I think like the history of people who build a brand in mining industry is filled with like you have a short finite life because you're too optimistic about stocks that go down ultimately. So we're really conservative in our promotional elements about companies. We absolutely give credit where it's due, but we're very cautious not to be like overly enthusiastic about certain companies, just in case it risks losing trust with our audience over the long term.
Okay, I'm going to round out the piece on red flags, but Trav, you're often Inspector Clouseau. trawling through the announcements.
Yeah.
That's your piece. What would you call out as like top 2 or 3 red flags that kind of that ring the bell for you?
Yeah, I'd say like number one, like if you just go to the last annual report of the company that you're thinking of buying shares in, go to the back of that annual report, and there'll be a section that says related party transactions, right? Now this is where the directors have to disclose if they happen to have a consulting company that's making money because and they're basically using the shareholder money of the company to pay their own consulting company. That is everywhere in this industry, and it is disgusting. And the moment if there is a single related party transaction like that, like I just honestly think so little of those people, and I think they should be like squashed from the industry. It's so horrible in my opinion.
Look at the REM report while you're at it.
Yeah.
And then like another one you hone in on also is the trade payables as well. Like when you look at the half year accounts and everything, like just, it's the money that they owe. Like there's some companies that owe like, they're like, oh, our trade payables are 70 million and that's gone down. So like it gives you an indication like of knowing how much cash these companies actually have when you think of what they actually owe people.
Yeah. And
that can, trying to avoid investing in something that has a surprise administration pop up.
Yeah. So making sure it's
a
going concern.
Totally. And another red flag, and this is one that we talk about a lot, is people don't talk about this stuff very often, but when you see a director step down from the board after the stock has had a really strong performance, great retail following, what that often means, the see-through on that is that the director now recognises that after they are off the board, they can rinse their shares on market without disclosure. So especially if they had some operational like role, if it was a managing director or an exec director, or they were also CFO of the company, and the stocks rallied and then they resign from the board effective immediately, they're probably rinsing their shares already. That's such a red flag, massive red flag.
And that obviously puts the pressure on the stock to push it down.
Totally. And the see-through is that it's overvalued like crazy, and future operational performance is probably no good.
Or it's shit. Maybe sell it.
Exactly.
And Matty, you've worked on mine sites yourself. Let's talk for people out there fossicking and prospecting. Explorer, developer, producer. Where's the fertile hunting ground in your guys' perspective, or from your experience?
In terms of what's the investment wise?
Finding opportunities, investing.
Yeah, it's all how much risk to reward you want to play with, like exploration, like early exploration. Like you see so many people burn money just like, especially in the lithium thing, they're like investing in things because they were next door to an existing thing, like the neurology play. So, but look, some of them went up, so it's a gamble. Like if you're looking at the exploration side of things, you nearly need some sort of indication that something's there. There's some assays. It's starting to prove up. Like whereas if you're going in early with no assays, no proof that anything's there, maybe some rock chips on the surface, you just open yourself up to chucking the money in and bloody losing it, because you got the risk of they mightn't find anything, and then they've got to continue raising money, which is going to just dilute and send the share price down. So, Spartan's probably a good example of exploration where I know it was a turnaround after a pretty horrible outcome previously, but, they had good intersections. They kept drilling and it kept sort of proving up, and that's sort of had that northeast trend about it. So that's probably that's your better sort of exploration path to look at, where they've actually got something. Mid caps are they're the ones that interest us most, with because they're the producers.
They've got an asset.
Yeah, so I suppose you asked about developers.
To the Lassonde curve, right?
Yeah, the
logo
this is what the logo is. This is sort of the path that a stock price can take, and like the part of the Lassonde curve is when they've proven it up. They've got the mineral resource, they've done the scoping study, they've done the PFS, and it's like, right, we're going to build it. But that's when they're at that point. They're not adding much value because they're not creating any more ounces in the ground, but all the risk is on now because they've either got a heap of debt to fund it, they might have raised a heap of money to via equity,
They've
which
gotta-
is
they've gotta
diluted.
Build everything. They've got to get the plant up and running.
Yeah, so it's priced on, I guess, it being executed pretty well. It'll probably, a lot of stocks re-rate after they execute well, but like it's priced at a point that we're expecting it to go okay, but there's a lot more downside if it doesn't go okay and it goes like this, because like starting a mining project, there is so many moving parts between the mining, the metallurgy, the flow sheet, just the bloody people. If you've got people involved in anything, it's bloody difficult. God, they can bloody the amount of shit I buggered up in mining. It's like, yeah. So that's they're a fickly one and like then there's the risk as well. We've seen so many that go into production, it doesn't ramp up properly. They've got a lot of debt. Then they need to, or haven't got much cash, then they have to raise money again to get them out of the shit. And again, so if you invested in that, you're losing money. So, but the producers are the ones we really focus on, because it's all about they dress up all these bloody their waterfall charts these days. They're putting them on liquidity and trying to confuse everyone. Like it's as simple as how much cash did you have at the start of the quarter? How much cash do you have now? Yeah. And seeing which businesses can have that operational free cash flow, and that free cash flow is taken into account all the corporate costs, any debt repayments, the hedging. What is the cash changing? And so there's a lot of companies out there that have, a lot of gold mining companies that have got these massive bloody market caps, but the free cash flow yield that they make on that is absolutely bugger all, because a lot of capex has to keep going into it to keep it going. And so and then you got to look at the ones that are making a lot of free cash. It's like, well, how they might only be making that for 1 year, there's just so many moving parts, and thinking of it depends on your investment time frame as well. It's like, do you want to make money in 6 months, or do you want to invest in something and make money in 5 years? So, yeah.
The way I think we look at these situations is it doesn't matter if they're an explorer, a developer, or a producer. I look for value. They can be anywhere. They can be a producer whose commodity has just had a massive supply shock. They could be a former producer that's now an explorer, like Spartan, like you mentioned, that have a mill there and there's just latent value. They've just discovered something as well. The way at least I wouldn't speak for the guys, kind of look at it is there value there? Is something, the market not ascribing value to a company for an asset that they have, future cash flows that they will likely have, and that can come in so many different sort of shapes and forms.
The question you always have to ask yourself as an investor in the market is how can I actually have edge? Investing is competitive. Where do I actually have outsized expertise potentially? And I'm not a geologist. It's not going to be geology for me. But maybe you can be at the margin a little bit faster to analyse a certain situation and act on it, knowing that this will play out over time, be it a supply shock, or maybe you're quick. You look at a mid-cap company that's beaten up and has previously had a bad balance sheet, but now it's a turnaround story with commodity tailwinds, but the market hates it still, and that's going to have a lot of talk, and it's the worst is over. You those are the things that kind of get me more excited, because you can protect your downside. You can potentially be a lot faster, because not many people are looking at these stocks. They're there's a lot of inefficiencies in this part of the market, because well, you know better than anyone, because you talk to the fund managers all the time. There's not a lot of experts out there that, and there's a lot of bad stories investing in these
and already
companies.
From where we are in the conversation today, there's a lot of complexity, and there's a lot of things that people might find hard to understand, to different terminology, grades, stopes, all this stuff,
Decline.
Decline, the angle. So all of this sort of stuff is hard for people to get their head around if they don't have their hands on it.
And we're entrenched in it 5 days a week, and on week. We just live and breathe it. And
it's an advantage in its own
we
right.
still have so much to learn, and you're just never going to stop learning about it.
In terms of mandates, you speak with these fund managers all the time. It's institutionally overlooked in a lot of cases. The fund's either too big, or they can't go down to those market caps or those liquidity levels for people like us. The same cannot be said for if a fund manager's got $5 billion. They won't be looking necessarily at the same sort of things, but it just doesn't move the dial for them. So that's a sort of edge to Trav's point that we think we kind of have.
All right. Well, let's keep going on our learning journey. Now, back in the day, I used to attend a lot of mining presentations, the slide decks and that sort of stuff, and the same reasons to believe would get rolled out. Let me list them out for you. You've got right location, right commodity, experienced team, world-class deposit, close to infrastructure.
Yeah.
Heard them before.
Right.
That's great. Yeah.
Does that sound about right?
Yeah.
Maybe we got water on site as well, something like that. And we'll build a railway. But if you could pick two of those reasons to believe, and you can only pick two, and I want to hear bet hedging here, what would you pick? Like from what you've learned, what would you pick?
I'd pick management.
Management?
Yeah, just because really good management can solve the rest. They might get a different project, like the company that they're stewards of, they'll find a way to create value. Other people will want to vend them a great project in a better jurisdiction. You can solve everything else if you've got a very good management team that has a long-term outlook on that vehicle.
If we're going to go a couple, I'd go commodity and location. So I just, on that type, like, you could have a bloody share price go up with shit management if the commodity is the right commodity at that time. Unfortunately, like it's not right. So, lithium last year going off. Now it's a bit in the toilet, but it's like, look, is that becoming a thing that people might start looking at again? Yep. And if you're going to narrow it down to like, right, do I want to invest in one in Western Australia or the Congo? So that's probably my two, I'd say.
I'd mix these. I'd pick management and commodity. You can't get the commodity wrong. We love looking at commodities that are deep into the cost curve. Mines are turning off. CapEx hasn't been spent and is not going to be spent going forward. Companies are retreating from it. They're the ones that just, that's what...
Such asymmetric, like...
Exactly.
Yeah, like buying uranium stocks 5 years ago, right? What a trade.
Yep.
And then you back that in with a quality management team that has a track record. They get lower cost of capital. They've done it before. They've got the experience.
Usually less dilution.
Exactly. They bring people in. They bring both employees and the money in. It just works on itself. It's like a flywheel, like we like to say.
And they're often teams, aren't they? It's often a group of executives that will work together. They've got different expertise. And
there's all these different cliques around.
That's sometimes a good thing, sometimes a bad thing, because there's a lot of little ones that float around together that have continuously poor performance all around.
Yeah, good. All right, I like the direction we're heading. Now, JD, you said you like to go those contrarian style. As a group, you like to look at some of the contrarian style opportunities. What's the current resources investment thematic that the money miners think is underrated?
There's a couple. I'll name one commodity that, ding, 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 I am long, but manganese at the moment, we've seen what happened with Groot Island, South 32's project off the coast of
I
the
definitely
Northern
haven't
Territory.
heard anyone talk about manganese lately, so you're highly contrarian.
I like it even more.
Yeah.
12% of the world's supply, to put it in a nutshell, has come offline overnight. History sort of shows you whether it's sort of iron ore when those horrific dam failures happened in Brazil, 2019, 2015 as well. These shocks have prolonged effects on commodity prices. So if you then can, find a producer that is going to reap the benefits of improved cash flow, then that's a good starting spot.
There's one pure play listed manganese like stock on the ASX, and that's why no one, and it's got a mine in South Africa, so that's why you haven't heard anyone talk about it, right? Because the fundies come in here, they can't own it, or it's like it's only $400 million market cap, what's higher now, but it's unloved, non-controlling joint venture interest. But to your point, like, that stock price didn't move for 2 days, ding, ding, ding again, didn't move for 2 days after Groot Island happened, and you could see it play out, right? Like there are photos, the port is smashed up, the wharfs, they can't export anything from this island, which is a major producer of the world's manganese. And the manganese spot price, the derivations of it, they take time to actually increase as well. It's not like that supply is offline and immediately the commodity price rips. you know, you're taught that markets are future looking and it's all priced in, but it's not, because inventories have to draw down, and then it takes time for the new ore coming online to be bid up at auction at the port, and it flows through the downstream, and that stuff just plays out. There's a really long timeline when these supply shocks come. They ripple through over time, and then we get excited when you can play those opportunities really, really early, because like there's going to be great, you know, like earnings accretion that comes from those sort of events to the pure play low cost producers.
Yeah. So manganese is one. What else is interesting or overlooked?
Probably the tin's probably the other one that, like, God, how many? You ever talked about tin on the show?
Yeah, not on our show. I did interview Bre-X, CEO back in the day. Been down to Tassie.
Yeah.
You know, noticed a few of the tin operations down there. Back in the day, there was a big the Ashmarsh resource over in Morocco, which was owned by Casbar. That was, you know, they were one of the companies that I spoke with. So
Wayne Bramwell.
Yeah, Wayne Bramwell. Yeah.
Yeah. So it's an interesting. These boys are long on the tin.
No, JD's not.
Oh, aren't you?
Not yet.
Jeez, I thought you'd be straight all over that. It's just like there's obviously a big Twitter following about it, but like no one really follows it. But it comes back to the similar to manganese in terms of like, right, what is the global supply and demand dynamics of that commodity? And like it comes out of a very limited amount of places. Like Renison is one of the in Tasmania is one of the only pure play ones you can invest in. The rest comes from, you know, dredging in Indonesia, and like there was all this. So Indonesia, they stopped exporting tin out of the country.
They've resumed,
last year. But then you had production issues in Myanmar, which is another area. So like you piece all that together, and then it's like, right, is there a potential supply issue in the future? Like it's, you know, all used for soldering. The increased electronics are just going through the roof forever. Like it's just so that's the. Like, we're not saying bloody it's going to go bloody up or down, who knows, but once you sort of analyse that supply-demand dynamic and know which stock has the most, we always say it, torque. So if that bloody price goes up 20%, which one stock benefits from it? So that's an interesting one. Yeah,
and to be clear, there's still risks on both of them. That's why they're down in the doldrums. Just feel the need to always add that in, because maybe on the demand side we don't see as much semi-manufacturing and all these things that play into solder. Maybe there's an incident in South Africa and Jupiter, the particular company, doesn't see the cash flow that we might think is going to come. So there's a reason that they're priced the way they are.
And in the case of tin, I think the demand actually hasn't really picked up, and there might even be stockpiling of the metal units in China as well, or hedge funds at play which want to see the short-term price rise, and you think the bull market's here, but it's not quite. You know, you're going to have to wait another year or so.
But is this what you guys are sitting around talking around when the cameras are off? This is the sort of stuff that you're bantering?
Yeah, mate, this is as interesting as the conversations get. Like, oh mate, she's talk about party central. I can't believe, but we just and I suppose it's why we're the bloody three bloody idiots doing it. Like we just froth it. Like it's such an addictive industry. Like when you mix the people, the commodities, the macro, the micro, the geopolitical, like and all that is going into this bloody. It's like making a friggin' cake. Like it's just like there's so much that goes into it, and the more you find out, the more you want to know. And it's just I think our addictive. It's good. Our addictive personalities are getting used in a very positive way. It's good.
And you talk about having an edge when everyone goes to tech and these sorts of markets. Going to commodities where it's hated, people don't want to do it, is in and of itself a small edge.
Yeah. So. There's not the same narrative, is there, around tin as there is around artificial intelligence and NVIDIA?
Nah.
Yeah, I think I've heard a bit about that in the news lately. just
you know, when your Uber driver's telling you all about it, get out. Yeah, that's when Bitcoin was the example of that.
You talked about management. One of the things that has come up in a few of the chats, we've talked about what's called a premium that gets ascribed when companies are run by a renowned management team, good track record. A couple of the examples, Ray Lee Finlayson, Mark Clark, Mick McMullen, a couple of the names that have established that premium and that following. From the digging and the searching that you've done, are there any emerging operators that you think are on the cusp or have that management premium in their future?
Luke Cray at Orabanda, you could arguably say has it already. The company hasn't produced a phenomenal amount of cash, pardon me, but big market cap. Yeah. So that's one that comes to mind. I mean, Bill Beament wasn't mentioned there, but he definitely has that and has had that in the past.
I think if you're talking emerging, looking at the performance of Ramelius with the free cash they've generated, I'd say if Mark Zepner went to another company, he'd attract a management premium just because of what he's done.
He's proven now, yeah.
Yeah, between the M&A and the free cash generation. And look, and it is as simple as that. Like, I don't know how they run the operations. I don't know. They could be the bloody greatest mine ever, be the biggest shithole. I don't know, but it is and coming from the mining background, you have to detach yourself a bit from it because the stock market reacts to cash in, cash out. Like, very simple. Like, are they making cash?
Yeah.
How they're doing it, don't know. Like in the gold mining.
Totally. And in the case of Luke Cray, like Orabanda's got a management premium, but he's technically unproven in terms of he's got everyone says wonderful things about him and his history at Northern Star, but as steward of the vehicle Orabanda, he's still a little bit unproven, right? But the management premium's already there. And I think before we're recording this, you guys had the conversation with Fisty, and Fisty was talking about one of the stocks they own is AIC Mines, and he said Aaron's never brought a bad deal to market. He's giving Aaron sort of credit for Evolution's rapid flurry of deals when he was heading BD over there, and he's right. And AIC probably doesn't have a management premium yet. It's been beaten up on skinny cash flows of a high cost mine, but that'd be one that might be able to accrue a management premium over time if what he does in that vehicle sort of plays out.
Flip it around. You guys also interview fund managers. You're passionate about the investing space. You get a lot of the fund managers that have expertise in the mining space onto the show and grill them. Who's impressed you?
Russell Delroy from Nero, he's been on a lot of times. But it was more so when he came on, because it's pretty risky. It's very risky. Not all fund managers could come on. So a lot of the ones you would interview from more, we'll just say in Sydney, they've got, they might have a big shareholder base that doesn't want to see him come on Money and Mine with bloody couple of blokes, one bloke swearing his head off or something.
Yeah.
So, but he, it does win. I'm keeping it tidy for you today. But Rusty actually come on and started really, it wasn't about stocks, it was about bloody shareholder alignment, incentives, activism, talking about all the stuff that's out there that I guess he ended up using the channel as a platform to help his activism. That was what it was for, but he was...
It was a message that resonated massively.
Had an impact on you.
Massive impact on us, hopefully a big impact on our audience as well, because he talks so candidly and freely about, what in his words is the biggest issue in our industry, and it's this misalignment between board and shareholders that's so prevalent and perverse in small cap mining companies. It was really profound. I reckon I've re-listened to that interview half a dozen times, and I still love it.
Well, the one that sticks out for me of late, which is this was an honour, was Mike Olkin from Sachem Cove. He was in New York. He's one of the OG uranium investors, been through all the cycles. And JD and we interviewed him at I think it was 9 o'clock at night, so it was it might have been 8. There's New York's 12 hours behind. And it was just that high level about uranium. We went for 2 hours, about the whole fuel cycle. Then, we were on the phone with him for another hour and a half after that, showing us. He was just feeding us all this data from back in 2005, and we could not get enough of it. I think JD went to bed at about bloody 2 o'clock because he was in Melbourne, and we did it over the thing. But we were just the people we've talked to, and even the people that we haven't interviewed but we've met, some of the big wig fund managers that are really influencing the market. And the fact that they listen to us all the time, and we met one last night, and it was just we can't believe we've got access to these people, and they actually want to see us. We just can't believe it. We're just it's an absolute privilege. So.
Yeah, there's so much to learn, and it's awesome how forthcoming they've been with their time, all of them. And like, there's bits we're learning off every single person we speak to. So you know, you can name all of them, but I mean, a couple others that stand out. Cav at Chester, he's been awesome.
Anthony Kavanagh.
Yep, and
Good
very
energy. That's
great
good.
energy. Vass at Collins Street Value.
Can you say his surname for us, please?
Diparoglu. His style really resonated with mine, the deep value investment style. So there are a couple that sort of
Yeah,
I
definitely
took a lot
very contrarian Collins Street, aren't
Absolutely.
they?
Like uranium in 2018.
And like cross asset class as well.
Yeah.
It's interesting.
They've bought a business like on the side, like they just look at value. And there's one that we haven't spoken with, but we're very keen to get on the show sooner or later. Samuel Terry Asset Management, Fred.
Yep.
He has a very similar style with Vass and what those guys do. It doesn't matter what the market is, it's just an opportunity that sort of screams value, and that's what they go for. And I think that as a style resonates with us.
Is that a call out, JD?
Yeah, it was. Straight up.
Come on, Fred.
Travis, yours. I think I probably took Rusty off you.
Yeah, no.
You would add some big ones.
Yeah, that I loved it. I'd echo that sentiment. Yeah, to me that one was that was the highlight for me, big time.
Nice one. Well, fellas, a year in, you don't want to get too emotional and reflect too much because you're only a year in. So big things in the future. But what's on the agenda for you guys? What's the plan?
We're always talking about like what's next sort of thing. Like we're not to take action on it, but we're always thinking. And the biggest thing for us is like, whatever decision we make, are we going to limit our growth? Because anything that at the moment everything's just publicly available, it's free, and it's one of those things that people are like, I can't believe it's free. That means
They're getting value.
That means they're getting value, and we're still growing. So as soon as we did any other sort of model, whether it's paywall or anything, we might cap the growth. So our goal, like, as Trav said before, we're in it for the long haul. Yeah. We want to grow it, keep getting better, like make it better, make the content better, and yeah, it's just keep doing like with the advertisement and everything. Like we haven't had like a bloody marketing team going around to conferences asking people if they want to sponsor. Like our focus has always been from the start, make the show the best it can be every day, make the content like something that people can't get anywhere else, and then all the opportunities just came to us. So I think that's what we've learned about probably how we're going to approach it going forward. Just never know what could happen.
Yeah, I'd echo Maddie's sentiment there. We've got a lot of work to do, so we're just getting started.
Yeah, keep producing informative and entertaining content that our audience finds really valuable, and that'll be 90% of it.
Nice one.
Yeah.
If someone offered me 50 mil, I'd probably take it.
Just twist my arm.
Well, I've got, there's probably a number that'd get me to do it.
That person doesn't exist.
Well, thanks again for reaching out to us. It's been great to do this Money of Mine Livewire collaboration.
Thanks so much for having us,
for
mate.
those of you watching Money of Mine, look them up on YouTube. It'll pop up right at the top of your screen. And I hope you've had a good time in Sydney.
Mate, thanks for taking a punt on us, mate, because we know we're probably a bit eccentric compared to Livewire, but yeah, we love what you guys do, and very very flattered you were willing to have us on.
We'll pop in when we go over to see Matthew Gabriel at Market Index.
Absolutely.
Yeah, I'm over in Perth,
absolutely.
So, good on your end.
Cheers, James.
Awesome.
Nice one.
Thank you.
Thanks, brother.
Hooter it.
Hooter it.
Yeah.